Have you thought about growing your wealth but don't know how to start? Talk to Invest by Metricon. They make property investing easy. So for all your tomorrows, build your financial future today. Invest by Metricon. Build wealth. Build today.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, welcome to a brand new episode of the Smart Property Investment Show. I'm not Phil Tarrant, unfortunately. Grace Ormsby here with you today. Very excited because we sometimes talk to people, who have 4 to 5 properties. 1 or 2 might be their first home. They might have just started rent vesting. But today we've got someone who's got a fair few properties in the bank. Really excited to unpack all of that. Siva Raj, welcome to the show.
Thank you. Thank you for having me. Pleasure being here, talking to you.
So Siva, before we jump into how you got into property, because I'm really interested to hear how you ended up on this path, but how many properties are actually in your portfolio, just to start off with?
Just a fair few, I guess. I've been investing since 2006. So it's been collectively, it's a fair amount of properties.
So you've only really been investing for 15 years, which isn't, a long time in the property game. Take us back. How did you get a foot in the door? What prompted you to start looking at properties?
Okay. Maybe I'll give you a context. It makes sense. We moved here from overseas. We migrated to Sydney in the 90s. And, since then, we sort of renting, pretty much for about almost 9 years renting. And suddenly landlord or the owner said, look, they're going to sell, they're going to move out. So it actually started from there. Actually, I bought my first property in 1999. It's a small unit where we could just call it a home. At the time, didn't have enough budget, didn't even have enough deposit. So I had to sell my car to actually get a deposit for that property. And at that time, it was quite challenging, didn't know anything, didn't know how to even progress from, not having deposit, not knowing what I need to do next. It was quite challenging, but I think I made the right decision by, getting into it very early. And, especially I'm studying at uni at that time. When you're at uni, you don't actually get very high paying jobs. So yeah, it was a tough call, but I managed to get through and then managed to secure a small unit, which I still have now.
Talk us through that unit. Where is it? What are the specs?
It's a small unit in Eastwood. I don't know, it's New South Wales. It's close to where we used to live. So it was, for my parents, it was much easier to transition into something's closer, familiar with that area. It was a bit of a struggle, especially when you don't know what you're looking for. It was a struggle. We looked at a few properties and we thought, okay, look, they all look the same. We didn't know any difference. We didn't know anything about stratas and anything like that. So, okay, fine. We thought, okay, we'll put a deposit in. But at that time, we didn't even know how we're going to actually get a loan for that property. So we put a deposit and then somehow we managed to collect enough deposit and get a bank to say, yes, they will lend us the money. At that time, it was actually a lot easier in terms of the price point, because we are talking 1999, right? So, probably, 3 times cheaper, I guess. So, yeah, so we got into the property and, felt pretty good, having you're calling it home, and also seeing my parents in a nicer apartment. And from that point onward, I was very curious about properties because we got into something that we have no idea about. And then suddenly, a few years later, people always talking about the prices are changing. And so it was a good eye opener for me, especially while I was studying.
Would you mind sharing how much you paid for that first apartment?
Yeah, I think it's around about 200.
Oh my goodness.
Yeah, I know in hindsight I should have bought more, but yeah.
Yeah, and you still got it. So it's obviously still worth it for you.
Look, I haven't done any valuation, but I should. I think it's probably around that 650 mark, more or less.
That would have to have been a pretty big confidence boost, especially, 21 years to have tripled in value at the very least. And it's something that you've obviously just set and forget. Is that the process that you've taken when you've been buying properties since, to just, buy it and just keep accumulating?
Yeah, look, after that property, I didn't buy for a little while because I was just trying to finish off uni and trying to concentrate on somewhere. Obviously, everyone come out of uni, they want to get a job or they want to, start burning money.
You've got other things on your mind, don't you?
Yeah, and yes, correct. But let's assume we don't have that kind of thing in mind. So I was very intrigued. I was really, really interested in property because I couldn't save that much money in that period that I bought. And then when I knew what the value of the house is. So I thought this is a way to go because you can't save fast as property value grows. So I went to a lot of seminars. I met Phil a few times as well. It was a while ago, and when he was in Penrith, I think. And yeah, so I went to seminars and I also did a lot of researching myself, how other people are doing. There was a lot of other people that were doing at that time. And a lot of people are actually very helpful. They got a lot of information, research, and also they're happy to share. They're like a very, very good community in that case. In property investor community is actually very helpful. So from that point, and I then bought an apartment. I didn't have much to start with, so I bought another apartment. I think it took me about 6 years before I bought the next one. Apartment, and so we moved in, got married, moved in, and then so the strategy after that is I wanted to really work out. Okay, what I can do different, what other experienced investors doing, and so with the knowledge I was able to. Initially was more buy and hold kind of strategy. So you buy in a good suburb, hope to actually for the value to go up in a few years, and then again, look at the situation and then go back to the bank and say, look, we have this much equity or my cash, and then continue with the investment. Again, it was more toward capital growth than any cash flow kind of investment. So that way that I was able to, roll my equity further on.
So did you do that with the first apartment to buy the second one as well? Had you lent on that
at all? I didn't want to take the risk because, my parents were living there, and I didn't want to take a risk of not having everything going south and not having a place. So I didn't do that but at the beginning, but I did that later down the track where I was more confident and I was able to know exactly what and where I wanted. I was able to do that with the next few properties after that.
Mm-hmm. So talk us through properties 3 to 5, kind of like what you talk about your strategy being for capital growth. So you bought the second apartment and then you obviously actually started looking. Was it more for investors investing to then have people renting?
Yeah, correct. So it's been more for investments from that point onwards. I think it took another 4 years before I actually started investing, because even though you have all the knowledge, you are still sort of scared about, what's out there and how to do things correctly. So I think 2010, when I became a father, and it really all kicked in from that point onward. And then I was actually able to buy not just one property per year, multiple properties per year. And initially it was started as a buy and hold strategy. And then slowly I learned a lot from a lot of other investors, a lot of other developers. Then slowly, start moving toward, small developments, like splitters, small, 1 into 2s. And things very small developments. I always looked at properties in a different perspective, because you're waiting. My goal was to look at properties from a different perspective in terms of capital growth rather than cash flow, because at that time I wasn't too concerned about cash flow, but I wanted to create wealth rather than for a long period. So I would look at opportunities where that I can capitalize on value, either, like I said, small development, I think the next one I bought was a large block on a smaller house on a large block. Then I went through a subdivision and, divide the property and then made equity out of that and then went on to the next one. So I was always looking for challenges. Every project that I've done is, I always looked for new challenges, new ways to do things.
Can you talk us through that first subdivision? Because that would have been a bit of a scary prospect, not having done it before.
By that time, I've already had a number of properties. So I knew how to sort of, manage the property and how to deal with the, other banks and, solicitors and all kind of property professional. But this was quite a challenging thing because I got a call from my agent and said, there's a block of land with a house on it. Look, it's going to the market in the weekend, but do you want to have a crack at it? So I said, okay, look, I didn't even know what it was. He said, look, you can split it. I didn't know what that split means at that time. So I said, okay, fine, looks exciting. So let's go for it. And I sent him the deposit and then signed the contract. And it was challenging, actually, because...
Where was it?
The first subdivision I did was in the interstate, and that the distance made it even more harder. It was in a place called Toowoomba.
Up in Queensland?
Up in Queensland, yeah. It's about an hour away from Brisbane. But I had a lot of connections in that area. So basically, it was a sort of an eye-opener to a lot of other things because I was able to finish that subdivision. I had a lot of issues, a lot of issues with a lot of different connecting to services, a lot of issues that I'd never thought of that would come up. Like when someone say I did a subdivision, I think, oh yeah, it's pretty easy. But it's actually a lot of learning. And then luckily for me, I got the property at a much lower price and worked through it and then complete the subdivision and, then started moving on to similar type of venture, I guess. So I don't up from that point onward, I was buying properties it has a prospect to do something with rather than just buying and holding from that point onward.
So with that subdivision, what did you turn it into? How many?
So we had the house at the front. We cut that off. We created a battle-axe block at the back and put a DA for a duplex.
Okay, so it was one turned into three.
Correct, yeah.
Yeah, cool. And you sold them?
I've already sold, yes. I mean, look, I don't like selling properties, but unfortunately at that time, I wasn't sure what I was going to do. So when the next sort of opportunity came up, so I thought, okay, this is a time to sell and then move to the next one. But I had the house for a long time that held on to the house for a long time as much as I could. But, again, when opportunity presents, better opportunity presents, you have to make the transition, I guess.
For sure. We're going to take a quick break there, but we'll be back soon with more from Siva Raj.
Are you wondering where to buy an investment property right now? Why not let buyers take the guesswork out of it? We can find you the right place on or off market at the right price. An investment professional from our national network of buyers agents can help you save time, money and stress and deliver you a tailored solution. Talk to us today. Call 1800 975 051 or visit buyersbuyers.com.au.
Welcome back to the Smart Property Investment Show. I'm here with Siva Raj, Siva, you sort of started your investment journey back in the 90s, but it took a while to really kick into gear. So was it around 2010 that you really looked into going, okay, this is actually what I really want to do, invest in property?
Yeah, correct. Probably 2010. A lot of things fell into place. I had a job after university and also, becoming a father, like I said before, it made a big difference. But the reason it probably took long is in the olden days, there's not many places or many people that you can get advice from. I guess now it's quite different. A lot of, you got your, magazines online, a lot of things are different now and access to is much easier. And the olden days, you are relying on, personal contacts or somebody to introduce you to somebody else. And, you're getting advice from people. Sometimes you don't even know who they are. And so it's, a lot of talking, a conversation with people. Nowadays, you can get on the computer and you can do a lot of those things, without moving from your chair or your desk. It was challenging, but I think I was lucky to be introduced into a circle of investors who did some of those things that maybe they were about 5 years ahead of me. So they were able to tell me what to do and how to go about certain procedures and how to actually, for example, simple things like circulating your equity. That I didn't know about that. It's all learning and it was quite tough. But nowadays, people's got an opportunity. I think better opportunity.
Good to know. And there's probably some listeners going, maybe I should get into it if it's a bit easier than it probably was in years gone by. How much do you think, the landscape in 2021 actually makes a difference in the world of property investing?
I think it's easier to do your, research and all your, back office kind of work where you can just observe all the information. You can make up your own mind whether it's suitable for you or not. But I think now it's more, saying that there's more competition. A lot of people want, it's natural. A lot of people want to get into property because they want to be able to provide for their family or, provide for the future or build their wealth, whatever the goal they have. It's just easier, and also it is harder without a good advice. There's a lot of people out there, with good advice, but obviously it may not suit you. Your personal circumstances, it may not suit you. But at the end of the day, you have to try it. You have to act on it before you can say yes or no whether this is suitable for you.
There you go. It's from Siva first. You have to go try it. Just getting a foot on the ladder is the hardest part about it, isn't it? As you can probably attest to, given that you have had in the last 10 years, you've added a few more properties to your name.
Yeah, correct. It's hard at the beginning because you are not sure, you're not confident, you don't have, rely on. But as you go through this, it's a journey. As you go through this, it get easier, it get more exciting, it get more, rewarding, let me put it that way. Not just financially, it's rewarding to see something grow, see something that you nurtured and, you from a seed to a tree, it's very rewarding. But obviously, as we're human, we want to do, things more challenging, more, expand into, much not better, much more challenging investment. There are numerous ways to do your, investment, buy and hold and the rest of it. But, as we evolve, as we go through the journey, it's just, you can see yourself, oh yeah, I can do this because you've done it a few times and, you got the experience now. And then this journey will have a lot of challenges, but then things that you can work through.
I want to pick on that challenging aspect, because I know that you're big into your developing. Is that what led you down that path, actually wanting to be involved in the whole process?
Look, I actually like challenges because it takes you to an uncomfortable position. Say, for example, when you do an investment as a buy and hold, you're already in an uncomfortable position. But after a while, you get comfortable. You think, okay, this is great. And then to get further, you have to put yourself in an uncomfortable position or slightly uncomfortable position where you don't know what's going to happen, but it's going to be good. If you work on it, it's going to be good. So that's a challenge that's going to, make you put more of your effort, more of your thinking skill outside the box. All the challenges, once you solve the challenges, you actually be quite, refreshing, quite saying, okay, hey, look, I've done this. Oh yeah, next, what is next now? So you're always pushing your bar up. So
what is it about the developing side of things that really, keeps you striving for more? Is it because there's more risk involved? Is it because the gains are higher? What is it at essence? Look, definitely there's more risk in, doing more development and more larger projects. And definitely there's rewards, rewards, it multiplies. But just let's put those two aside and look at it as your profession. Okay. Now, when you have these challenges, when you go through this process, you still understand that, oh yeah, look, this is what I love doing. This is something that, I can, I can do and not retire. And you're obviously good at it. Correct. Yeah. So once you get to have some confidence, and then you will eventually get to a point where that you can help others, like other people, like somebody else helped me throughout the process. It's quite rewarding when you look at it from a different perspective. You're building your wealth. You're looking back 20 years and say, wow, from there to here, it's a massive change. Not only that, it just as a person, you develop a lot of different skills, a lot of different, for example, you develop a lot of negotiating skills, a lot of people skills, and you become a bit more calmer, okay, what are your next goals are, what are you're not chasing your tail all the time. So it's quite interesting. So what are your goals at the moment, Siva, with it all? at the point we're at today in 2021, what are you trying to achieve by investing in property?
It's a good question. The goal is always changing. It's always changing, I guess, for the better. Look, I always wanted to have my profession to be something that I love. Mm-hmm. I think recently that has happened. So the goal is to, do what I do as a profession, not as a hobby or side investment. So do this as a profession, which I'm doing at the moment. The goal was to get to that spot. So I haven't actually thought about what I'm going to do. That's a good question. I should think about what I'm going to do after this. But if you ask me, I have some ideas. I probably want to help others, maybe teach them. If somebody needs some help, we can teach them. Or look, something satisfying in that sort of part.
So are you now looking to, when you're developing properties, because that's the way you've sort of taken it, and you're obviously doing it 40 hours a week, are you still doing the buy and hold, or is it, what do you look to do?
Okay. So look, I've changed my strategy throughout this process when I started getting into development. So when I started getting into development, I decided I'm going to buy and hold only from my developments. So what I mean is that, so when I do a development of, say, 2 properties or 10 properties, I will try to keep portion of it into my portfolio, so that I'm actually doing it at a wholesale rather than a retail, and also added equity into that property. Sometimes you might even get a property, has no finance on it because you have all your profit has gone into that property. So that sort of way that I'm building my portfolio, because that for personally that. It works for me because it probably not work for everyone. A lot of developers or investors, it might not work for them. It works for me because, look, I'm not in a hurry to get rid of all the product that I create. And also reminds me that, okay, the path that I came through. Look, and also you can always refinance and, use that equity or the profit that in there into a next project. So it ties quite well. Going from an investor perspective, still keeping that as an investor mindset, still be able to generate income plus able to generate more equity.
So are you negatively or positively geared, or does it depend on the properties?
So some of the properties that are negatively geared, mainly because taken that equity to put into a different project, but it doesn't really actually matter because, if a property is heavily negatively geared or heavily positively geared, then you can use equity from one to the others. If you have, end of the day, your portfolio would be, balanced. For example, if you have 10 properties and 5 are negatively geared and other 5 are positively geared. So end of the day, you want to get to a position where it's a neutral or, giving you some money, for the future. But like I said earlier in the piece, I am investing for capital growth. I'm not really investing, or I haven't really started investing for cash flow because that was my strategy. And then I'm sort of holding on to that path. And it has worked for me, probably not, maybe other people not work for them, but it had worked for me throughout. And also it's easier to do a larger project, larger scale developments when you have that equity back end. Look, it's personal preference, I guess, to have whether build your equity or whether you're building a cash flow.
We're going to take another break there, Siva, but after that, I'm going to ask you about where you've actually got all your properties located, because surely the last couple of years, there's been some pretty heavy price growth going on, and that would have boosted the equity a lot. We'll be right back.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back to this episode of the Smart Property Investment Show, joined by Siva Raj. Siva, You've obviously got, some pretty good equity and portfolio behind you at the moment, which must be a great feeling just through the amount of uncertainty that we've seen over the last 18 months or so, especially with COVID-19. Have there been any points where you have been a bit worried?
Look, at the beginning, I think probably in April 2020, that's nothing that we've seen anything like that before in not just in Australia, in anywhere in the world. So it was a bit of a time where it was a bit scary because, okay, what happens, especially that tenants don't pay their rent, and you still have obligation to the banks. And if you have a large mortgage, obviously you have to, you've got to still fulfill your obligations with financial institutions. So that was a sort of a unknown time. And then after that, I think, government stepped in, and also all the large financials, they all stepped in and say, look, we can pause your, if you're hardship, we can pause you. So they're given a lot more to people at that time when there was uncertainty. That was actually great to see Australians, doing this. So look, it was a bit scary, but I think after a while we got used to, this thing. And then from that point onward, look, it's completely different. To give you an idea, actually April 20, I think I signed a deal with, quite a large property deal at that time. And I was actually quite scared because I didn't know what's going to happen at that, coming forward, even 3 to 6 months. But it's been really good because even though I could have easily said, okay, I'm going to pull the plugs on this, not to go forward. But I actually, look, I always thought that when there's an insecurity, that's when you can actually step in. And if you're confident, you step in and make sure that the wealth is made during that time. Look, even my previous investment, GFCs, that's probably the time that a lot of people didn't want to buy. But that's the time I bought most of my properties. So downside means more risk, but I always taken risk during those period.
And you love the risk and the challenge. And so obviously you didn't offload anything at that point in time.
No, I didn't. Look, I don't like to sell any of my property unless I really have a project that is really worth and exciting. Unless that come to that, I don't try to sell anything or offload anything, because I'm here. It's a wealth creation, right? It's not just about holding on to as much as you can when you can't, when you're on a thin line. So I always, wanted to keep what I have and add to that portfolio slowly rather than letting go of you. But I did let go of you earlier on in my investment journey, mainly because some of them were not performing, or obviously you got to always look at your portfolio and say, look, what is performing and what are the opportunity costs that you have because you're holding on to something that is not performing. So I did get rid of a few things that was not performing at that time. But look, with property, time always heals a lot of wounds.
Opportunity cost is actually a major point in that. And I'll sort of jump back to that in a second. But before I do, Siva, can you run through where you actually hold properties?
Okay.
What locations?
Look, initially I started in Sydney, a lot of places in different places in Sydney, different part of Sydney. And two state, I guess, is Sydney and Brisbane in Queensland. Mm-hmm. So majority of my developments in Queensland, majority of my capital growth properties in Sydney.
Okay. And they're both markets that are doing pretty well now with
both markets
during
are doing
COVID.
Excellent. Especially after COVID, I think a lot of people have realized that, look, it's the right thing to do for them. Personally, I guess, the right thing to do. The both markets are going I know the both market quite well, so I only try to stay with the market that I know. Yeah, Sydney is doing very well, and also as Brisbane in the last 6 months, probably 6 months doing very well.
I hope none of those properties that you did offload were up in Brisbane, because that market is just going crazy.
Unfortunately, yes, it was.
Oh, no.
in Brisbane, yes. But look, the thing is, I had a better opportunity, so I had to exit from those and go into better opportunities. So I did not regret offloading them, but I just look at it as added a lot more value to my portfolio.
Mm-hmm. Well, that is really, really good to hear. And we talked briefly on opportunity cost before, but I do want to ask you, Siva, Has there been any times where you've gone, this is a mistake, I've really screwed it up this time? Like, are there any mistakes that you can share with everyone to maybe help them avoid making the same mistake?
Look, throughout the whole process, there are mistakes I made. And sometimes I pull my hair and say, oh, why did I even get into this? But look, mistakes, as long as you can mitigate your risks and have a straight head and then continue with your mistakes, challenges, it's going to be there, regardless of whether you buy a house or whether you build 100 apartments. It's going to be there, challenges and mistakes. As long as you learn from them, as long as you, have an open mind, constantly learning, constantly find a solution to a problem or to a mistake that you made in the past, that's the way to go. There are a number of issues that I do come across that, sometimes I say, oh, look, this is it, enough. But next morning I wake up and say, no, let me fix this. So it's kind of because I'm so used to getting hit by a new thing every, so often, I'm so used to that at the moment.
So what's next for you?
Look, what I've been working on is more to commercial kind of ventures. So we just started a new venture recently, like just before COVID. So I'm looking more toward, holding on to the residential, more toward bigger subdivisions and bigger and moving more into commercial space. And mainly because there are opportunities out there that you can easily capitalize on. Obviously, it comes with more risk and more capital. But if you have both, if you can mitigate the risk and if you have the capital, I think that's a part. Look, a lot of developers seems to be that kind of part is very sort of not set in stone, but that's a part that a lot of the developers, bigger developers, and people who are in the industry for a long time that have been taking.
So where are you looking? What are some of the areas that are right for that commercial investment at the moment? Because it does feel a lot like, from my perspective anyway, no one can go into the office at the moment because of lockdowns. There's probably a lot of companies that have struggled and won't be taking up as much space post-pandemic. So where are there still opportunities?
Yeah, look, there are a lot of different industries, not office industries, but a lot of other industries like, healthcare, childcare industries. And there's a number of industries out there that, regardless of, retail, for an example, industrial, there's a lot of different industries that you can tap into. Maybe the office space has slowed down a little bit, but I don't know what the future holds for them. But, other opportunities like aged care, those are the things that, people still need, even if it's COVID, you still need to go send your child to, childcare, all the retirees have to go get help in an aged care sort of scenario. And again, with the retail, obviously, people still have to buy a grocery. They still have to get, cut their hair, like beauty, like there's so many different looks in terms of retail, but there's so many things that, it will open up opportunities. Just because we are all stuck in home at the moment doesn't mean that, when it all opens up, it's just still going to be more opportunities. Maybe for certain industries, but for certain office industry may not be the case. But for other industries, it'll definitely be opportunities.
Yes, it sounds it, especially if you've been working on them for a couple of years from just before COVID. Probably by the time COVID's all done, they'll all be ready to go and people will be wanting those services again, hey?
Absolutely. So as I said, you get in when the sentiment is low and then you exit, sentiment is very high.
Amazing. Well, best of luck with all that. Are you going to stick to the Sydney and Brisbane markets? Are you going to stay Eastern Seaboard?
At the moment, that's a plan. But,
things change.
Things change, challenges come through. And then, yes, definitely.
Well, Siva, it's been so great chatting with you today. Thank you so much for sharing your insight and your knowledge. And I hope we've inspired a few more people out there to take a similar route to you. Thank you very much for having me. And, it's been a pleasure. If you enjoyed this episode, make sure you like or review us on whatever platform you're using to listen into the Smart Property Investment Show. And if you have any questions or you think you might be a potential guest for an upcoming episode, reach out at editor@smartpropertyinvestment.com.au. Make sure you're staying up to date with all of our latest news and information on the Smart Property Investment website and our social media, Facebook, Twitter, and our LinkedIn. Until next time, stay safe and well. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
In the property investment industry, there's countless stories of the one that got away. And it's always the same reason. To pay the deposit, they needed the settlement from another property to come through, and they waited. Realty Assist Australia knows that when you find the one, waiting isn't an option. That's why they have a same-day settlement fund advance service. There's no credit check, no application fees, just a single one-off fee to advance your equity. Visit realtyassist.com.au/settlements now.